Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, let's take a look at the gold market. So you can see gold shows the normal reaction and resistance. We discussed yesterday in general. As we said, technically gold is suitable for taking the short position if you ignore any other risks that stand currently on the market. But mostly we suggest that it should be political risks. But as the major information now is delaying in release, so probably it will come later, maybe next week, or maybe tomorrow. But as we have no external impact on the market is driven by the technicals. And from technical point of view, we said it's great opportunity to go short if we wouldn't have any political risks. Because political risks, they will come surprisingly, unexpectedly. So, for example, today you see normal technical reaction, and tomorrow in the morning you will wake up and see that the market stands above the 2000, for example, if some event will happen through the night. So that's the specific of the political risks if they appear. But since we haven't got it yesterday on this week by far, this market is gradually driving by the technical factors. So from the technical point, everything we said about the political already, I would not want to repeat this again. The one thing I would like to show you, just we think that this is the first bell in the common changings that could happen within a couple of weeks. So take a look in the Bloomberg article yesterday. The Republicans block an inaugural resolution recognizing Biden's win. So it's great discussion is widely expected in the 21st of the December. It should be a lot of important information. Maybe something we will get also tomorrow and around colleague voting on the 14th of the December on Monday. So, but when this source like the Bloomberg, also this article was repeated in other well-known news agencies, but if you see in Bloomberg this article, that definitely means something. And we think that this is the first bell of the coming changes. But on the market, you do not see any reaction. Mostly, the recent sell-off on the gold stands in, disappointing on the investors on the rumors on the expectations of the stimulus, because in the previous week it was widely announced that the stimulus from the Fed, stimulus from the government, and now you can see that no voting on the stimulus stands in the Congress, so no solution has been made. Fed also hardly will provide any stimulus, that I also talked about this many times already, and that leads to chilling out of the bullish mood. And you can see market shows the downside reaction. That is what stands on the background of this drop. Technically, it could be explained that market meets strong resistance, its previous lows around 1850 and conference resistance around 1885 approximately. So consider reaction. In a shorter term, within the day-tomorrow perspective, you could see on the market type of the action that reminds evening star pattern. So upper direction, minor candle here, and drop. And within the two sessions, we probably could be totally focused on this pattern, because this pattern suggests usually a type of the ABCD pattern to the downside on the intraday charts. And that's what we'll intend to keep an eye. So on the 4-time frame chart, you could see reaction on the COP. It becomes a bit greater. Market mostly totally erased this acceleration that was to the COP based on the expectation of the stimulus, by the way. And now it's totally erased. Theoretically, formally, this ABCD pattern is still valid because market stands above the C point. But I think this is temporary, and in the nearest time we could see drop below the C point. So that's usually how market behaves when it forms engulfing pattern or when it forms morning star pattern that is actually evening star pattern that is actually mostly the same. So theoretically, if we will follow the classical approach, how it should be, you could see the picture on the hourly chart. So take a look at what we have. First leg down of this pattern, probably we will get deep retracement to the upside. I would suggest it should be in the shape of the ABCD pattern somewhere to the 1850, 1856 maybe, just because gold likes to show deep retracement second, because here still we have the acceleration. Overall upward momentum is not bad, and it probably should be strong enough to push gold slightly higher, to show deeper retracement. Finally, based on the harmonic situation here, it's a bit slightly high at the top of this, let's call it the shoulder. So here's also should be something of that sort. And then, following that, again, classical shape of the price behavior based on the evening star pattern, it should be downside continuation somewhere to the 18 even, in kind of the A, B, C, D pattern. So here you have few vital points. First of all, it will be vital here, 1850, because moving high and moving back to the top tell you that something is wrong, and that could be the preparation for the breakout. Maybe the fundamental background will start to change at this moment. Something should happen. Market should not show too deep retracement, and definitely not in excess of the 618 level here. So that's the point that you need to keep an eye on. Potentially, if you would like to go short and you do not have the short position, you could consider, for example, this cartridge cheaper to sell. If it will be formed, that's a chance to take the position with the $50 potential. But again, that is what about the technicals. We do not deny the political risk currently, guys, and we still think that it's a bit dangerous currently to take the short position in the gold. Not because the technicals are bad. So overall picture on the technicals looks very clear and nice for taking the short position, but just because of the specific how political risks act and impact on the market. Usually it's explosive action, just you're waking up in a different reality, or when an event will be released, it could be really unstoppable action could happen on the gold. And so we think currently that these risks are too significant to consider short-term bearish patterns on daily charts. So, but this is just our view. It doesn't mean that you should not take the short positions. That's choices up to you. It's not forbidden, of course, and who knows, maybe you will get 1-2 good trades before something will happen. So that's the pattern actually that we have on the gold.